Welcome to Mubu's webinar. My name's Jessica Amir. I'm a market strategist with the Australian team, and I'm proudly joined by Justin Zacks, head of VP strategy in our US team, who's standing by. Today, we're covering the big tech earnings. It's the most important week of US earnings season yet. Plus, we're also covering the key drivers, what you need to know about markets right now. But let's just get straight into it. So we've got the US market, the S&P 500, as at this morning in the US, the S&P 500, or rather your US close, our morning here in Australia. The S&P 500 has closed up. It's now up 22% this year. The NASDAQ just cracked a new record all-time high. It's up 25% now this year. And I guess markets are awash with green, running hot with the US election 1 week away. Plus, we've had better than expected company earnings. The latest from Alphabet are reporting a bumper report card. But all in all, as we're covering today, Justin, we're covering the three major companies that you need to be across. But critically and importantly, the good news is we do have 235 companies out of the S&P 500 companies that have released earnings, and most of those have beat expectations. Justin, I was just looking at the numbers before we kicked off. Earnings in the quarter are now up 9%, just phenomenal. That's far better than expected. And if we can be cheeky, I guess, Justin, we might say you can annualize that up and say that earnings year on year up 36%, which is far better than the 15% expected. But the fact of the matter is, it's not just about earnings that's driving the market. We've got Donald Trump trades with the market pricing in a potential Trump victory. Plus, we've got the US cutting interest rates and China as well. But as we said, it's all about earnings, big tech earnings. Apple's next, Apple, Meta, Microsoft are the key for this week. But Google parent Alphabet has just laid out a very strong runway for potentially what we might expect from the All-Stars later this week. Justin, let's just kick off to you. How important are these earnings? How important is this week? What's your take on this tripoli of earnings? Will it be a make or break? What are your thoughts, Justin? Over to you.
Well, here in the U.S., we have the World Series going on, and if there's a World Series of earnings weeks, this is the week for that. Something like 42% of S&P 500 companies by market cap are reporting this week. And let's break down a few of them. And the great thing is, the Moomoo app has a great way to look at the earnings. And if you haven't looked at the earnings calendar to see what's coming up, it's a great way to visualize it all. So you can just click in your app on an individual day, and it brings up the top 5 earnings. So, today we saw AMD, Visa, Alphabet. Tomorrow, Wednesday in the US, we'll see Lilly and AbbVie pre-market. And post-market, we'll see Microsoft and Meta. Then Thursday, pre-market, MasterCard and Merck. And post-market, we'll see the big ones, Apple and Amazon. And then Friday, we get the oil majors, 2 of the biggest oil companies in the United States, Exxon and Chevron. So, what I try to do in game plan a lot of this is look, into this earnings calendar and then select it. And then I can go down and research it by that particular stock, see what the estimates look like, see what the previews look like, see what the analysts are thinking, look at the technicals in the past, couple months. It really gives you a good idea going into those earnings. And the most important part about trading is all the homework you do before the earnings to set your trade up so you know exactly what to do when those earnings do hit the wire.
I think the great thing about our app is Justin was just alluding to the fact that investors can add earnings that they want to be across to their calendar. So before they announce, they can see it there in their diary, depending on if they're using an Apple, an iPhone or an Android, etc. And then on the eve of reporting, they can be abreast of that, click through when the company reports, and that'll take them right through to the Moomoo platform. And investors can read the quick analysis from our AI feature on what the company has reported. If it was better than expected, did its revenue grow? Did it surprise to the upside? What happened to its revenue? What happened to its profitability? all those things can be used. Great features on our platform. Justin, the iPhone 16, we're going to get lots of details about that. Will the iPhone 16 surprise to the upside? Is it going to be the saving grace for Apple? We don't know. There's lofty expectations. How much do they matter? We know Apple's earnings all in all year on year. And when we're looking forth for the year ahead, 2025, Apple's earnings are only expected to be in single low digits for the year ahead, a stark contrast to the other tech leaders who are reporting this week. Heck, what about NVIDIA? NVIDIA is expected to report double-digit revenue and sales growth. But let's just go to Apple now. To you, Justin, what are you looking out for specifically?
Yeah, I mean, you really nailed it there. It's, they're expecting about 5% earnings growth this quarter, which is lower than all of the other Mag 7s. So you're really looking for growth. And you're talking about it's trading 35 times trailing. So that's a big multiple for very low growth. So they really have to nail this iPhone 16 introduction, and people are going to be looking to see how well they did. And the real thing that's going to really matter is this December guidance, because they had kind of this AI rollout, and that's a lot of the reason why people want to upgrade their phone, because there's going to be all these AI features. In fact, they just introduced a ton of new Apple intelligence features today that includes stuff available for the iPhone, iPad, and Mac. That's different writing tools, editing tools, a visual interface for the Siri assistant, the ability to recap text messages and notifications, and kind of this cliff notes. It makes it easier for a lot of people. And the real question is this valuable enough to trade up your 14 or 13 or whatever number you already have and buy a brand new iPhone 16? And at the beginning, when they initially rolled this out in June, they didn't have all the features. So now they're still not going to have them all. So what we really want to hear is, how long will all these features take to roll out, and is this going to affect the demand? And so the interesting part of this is there's that part of it, and then there's just the overall demand structure based more on the economy. Is the economy doing well? People buy more phones. If it's not doing so well, maybe they cut back. So it won't be necessarily clear. And what I would urge people to do with this Apple report is, don't just trade the number here. So as soon as you see the number, wait for the earnings conference call, and we will be broadcasting that on the Moo app. So if you want to be able to tune in for that, an hour after the earnings release, to really get and hear the comments from executives on what that demand is and what's influencing. Is it more the AI, or is it economic conditions? And that's what I'll be really looking for.
Justin, so just on Apple, it seems that investors are really, I guess, a little bit perhaps maybe disappointed with Apple being perhaps late to the AI party, if you will. So how much of that do you think investors are expecting? Will it live up to these lofty expectations? It's not just the iPhone 16, but it's also the 15, where you've got the integration of these AI features. So it'd be really telling to see what Apple is expecting in the next couple of quarters and the year ahead. And if, we'll see a huge, perhaps it's not likely, material boost to their earnings on the horizon. But anything else that investors should be watching out for when it comes to Apple?
Yeah, I think they really should. As you mentioned, with all this happening and all the kind of somewhat negative sentiment, you have a stock that has really traded very well. So I think that's something investors need to be aware of. And for all of these names, all these Mag 7 names, in terms of the options market, the interest in downside protection is relatively low this season. So people are expecting good reports. They're not really worried about a huge miss. So that's something to take into account when you do trade these names.
Yeah, absolutely. And Apple, I don't know about you in the US, but Apple down under in Australia has increasingly been traded on Moo's platform. So I guess our investors are perhaps expecting good things. Let's move to Meta now. Meta, a completely different story. They've changed their business. They've slashed their costs. and their shares are doing exceptionally well. Justin, what do you think are the key drivers in their report?
Yeah, and here you do see a stock that's a lot different. They have a lot higher growth, something like, I think, 26% expected on adjusted earnings this quarter. What I'll be really looking for is two things. One is, how much are they spending on AI? Something like, I think they're expecting around $38 billion in CapEx this year. That's a lot of money. And in particular, are they able to spend that money and still keep this earnings growth up? So I think it's a twofold question. Are you able to earn that money and also spend for the future? And if they can do both, it's going to be a good report. And in particular, I'll also be looking at the growth in the ad sales. That's expected to grow, I think, about a little under 7% for on a price per ad basis. The other part that's a big spend on their part is the Reality Labs. What will the operating loss be on Reality Labs in relation to their profitable businesses? So I think we're still having a few technical difficulties here, so I'll kind of move on and talk a little bit more about Meta. I think Jessica's back now. So Jessica, just to sum up, I really think we were looking at the AI spend and the CapEx, and then the ad sales rates. That's something I'll be looking on the watch for with Meta.
Yeah, absolutely. And when we think about a stock around earnings season, we all know, stocks in the NASDAQ, as we kicked off with, have been, trading higher in anticipation of better than expected earnings, just because of, the landscape that we do have. The Fed is easing. We also do have China cutting interest rates. So there's lots of stimulus going on to provoke sales to the upside. But more importantly, when we're thinking about post-release, we all know that a company's share price is generally moving based on if the fact that they beat expectations or if they miss. And this season, Justin, we've seen more beats than misses. So a lot of companies, as we kicked off with, have delivered better than expected news, and that's why their shares are moving higher to the upside. When we think about Meta, what potentially could investors maybe be expecting post-Meta release?
Yeah, this is a really interesting one. So what you actually can do with options is you can look at the weekly options and imply how much the stock might move, or how much investors think the stock might move. And you can also compare that to how much it actually has moved in the past. So in the past few reports, Meta has been a big mover, both up and down, and it's moved an average of about 13%. But for this report, investors are only expecting about a 7.5% move. So it's pretty interesting. They're expecting whether that's a beat or a miss, or they're expecting the move to not be as big as it has been, which is different than some of these other Magnificent Seven, which are much more in line with their historic moves. Their implied moves are about the same.
Yeah, so we do have a history of beats, but we all know history doesn't always repeat. Maybe it does tend to rhyme, but you mentioned their valuation going into the earnings report, but what are some takeaways? We just had Google reporting a far better than expected result. What might that allude to as to what we can expect from Meta? I'm just bringing up a chart here, so feel free to talk to that.
Yeah, so if you look at Google or Alphabet, they kind of are firing on all cylinders. They had a really excellent beat. But the stock right now, as we're talking, is only up about 4%, and it was quite a big beat. And so the one thing we can imply a lot of times is, the advertising in Meta and Google can flow through sometimes. And the one thing I will mention is this year, as you mentioned before, this is a political presidential election cycle, and the spending on ads tends to be really great in that third quarter because of the political ads. And I'll be interested to see if some of that, it was the reason Google beat so much. But again, that's not just advertising. They beat all the way through. And so that's something you may want to imply into Meta. But again, be careful, because you didn't, even though it was a tremendous beat, you didn't see a huge move to the upside. And so that's what I would be looking at going into Meta's earnings.
Nice. And just circling back to options, in the US, your users tend to be, I guess, more comfortable with option strategies, but down under here in Australia, any tips or traps that you recommend? What tools can investors use on Moomoo when they want to find more information, Justin?
Yeah, I would say, if you're not that familiar or you're just getting started, Moomoo has a lot of features that can help you with that. And the number one most important thing is paper trading, to get on there and just test your strategies out without real money and see how they work. Number two is an options calculator, to understand what your profit and loss might be and what the risk you're taking is going into earnings. And most importantly, I would say, people think about trading earnings. It doesn't mean you need to hold a position overnight going into the earnings, because that's the riskiest thing, because you can't trade the option. So you could trade it the day before, you could trade it after the earnings, and some people like to wait a couple days and kind of see how the report is assessed by the analyst community, how the market really thinks about it, and then they get a better idea of what that trend can be, and then they can trade it at that point. And that might be a better way to not be subject to as much risk as you would trading it overnight.
Gotcha. Thanks so much. And also just worthwhile noting, stepping away from options for those perhaps down under or in the US that are focused on stocks, or we call them cash equities. Do also consider that some investors may potentially look at taking some cream off the top of stocks ahead of earnings. Now, I might not be talking about Microsoft or Meta, but potentially with Nvidia moving higher as an example, you could potentially maybe be expecting some Nvidia's shareholders to be taking cream or profits off the table, just in case we get a disappointing result, which is not expected, but just worthwhile mentioning. That is a strategy for some investors when they want to minimize risk or lock in profits. Let's move to Microsoft now, shall we, Justin? That's Wednesday after your US market close, right? So investors, what can we be expecting from, I guess, the second or equal first biggest stock in the US, Microsoft? What can we be expecting when they report from their numbers, Justin? What are you looking for?
Yeah, so the consensus analyst estimates about $3.11 per share. That's an adjusted growth rate of about 4% year on year. Not too much growth this quarter, and possibly lower sequential revenue growth. And we haven't seen that out of Microsoft in a while. So this quarter might not be the best quarter compared to some of the other quarters they've had or going forward. But the real focus is going to be in their growth in that Azure product. I think that's around 32 to 34% growth rate that's expected there.
Just pulling up a chart here of Microsoft shares. They're a far cry from their record highs. But what else can investors be focused on when it comes to Microsoft? What do you think might pack a punch and really maybe take investors off their chairs and see their shares move higher to the upside? Hard to say, but what's the wow factor here that we could be expecting? Maybe.
Yeah, it's all about that Azure and the intelligent cloud revenue and their margins, right? So are they able to increase those margin rates at all? That's what everyone's going to look at, and that is going to relate back in part to their CapEx spend. They're going to have the CapEx spend not only for this quarter, but what are they going to guide for 2025? Almost $60 billion of CapEx is kind of expected. So I'm curious to see if there's any guidance on 2025 CapEx.
Great points. Also really critical for investors to take heed of what Justin just said. Guidance is really important for these mega cap companies. So any indication that there's going to be I guess, a better than expected runway for earnings and revenue is going to drive their shares likely higher. But let's just focus on the technical setup maybe for Microsoft. I'm going to remove myself out of the screen, just focusing on you now and the chart. What can you tell us about Microsoft?
Yeah, so the real thing to focus here on Microsoft is it really hasn't moved much since February, right? So we're about the same levels, and we might be forming what could look like a head and shoulders pattern here. So what I'll really be looking at here is the 400 level, and that's where you're kind of going to get it could get a little bit precarious if they miss and we break below that 400 level. That could portend downside from there. So that's where I'll be looking at technically.
Thank you, Justin. Thank you very much. And just a quick note, should have done this earlier, a little bit of housekeeping, but if you do have any questions, please submit your questions in the comments section and we'll endeavour to get to those. We do have a swag of questions. We've got many questions, and thank you to those of you who sent them through. We'll get to those very soon. But just before we do, we promised that we'd cycle through some other key drivers, some other companies that we might be watching, perhaps some sectors and some key themes. So let's just get to those. So we've already spoken, Justin, about US company earnings being better than expected this week. If we get some earnings beats, that could support the market, that could support the S&P 500 and the NASDAQ, and these companies hire themselves. Of course, everyone likes good surprises, and we get an earnings beat that typically lifts a company's shares. But there is a little bit of room for disappointment. If we do get disappointment, we do have to remember that we've got bond yields quite high, and if we do see a pullback, that is something to be potentially mindful of. The technical indicators for the S&P 500, the NASDAQ, are looking frothy. It doesn't mean the market can't keep on pushing on up if we get some cracking numbers from the big tech companies that Justin's highlighted. But if we do get some disappointment, that does mean the market could potentially be on shaky ground and could maybe step lower. If the market does step lower, we've got to remember that we're in a bull market. And for the past 2 years, every time the market has fallen, say 5 or 7%, those dips have been bought. And Justin, we've been talking to some Moo users and to the media in general that if the market does pull back, you might expect pullbacks to be bought because we've got a record amount of money sitting on the sidelines, perhaps ready to deploy if the market pulls back. So that's something to consider. So that takes me to my first slide. If we can just demonstrate what we've seen in the NASDAQ as example. We're just highlighting that every time the market has pulled back, it's rallied on up to the upside. And as Justin and I have been saying, that's primarily driven by the US economy, China economy stimulating. Plus, we've got earnings growing far quicker than expectations. So that's something to consider. We also wanted to highlight, we're just cycling through, conscious of time. We are due to wrap up this webinar in the hour, on the hour, at the top of the hour. But just wanted to touch on NVIDIA. So we've got NVIDIA shares cracking through to record all-time highs. Of course, their earnings are some time away, but their market cap is just outstanding. As we were saying earlier, they're now equal on par, the world's biggest company. I believe with a market capitalization, Justin, correct me if I'm wrong, $3.5 trillion US dollars. Is that right for NVIDIA?
That's crazy because that's bigger than most countries' stock markets, right?
Yeah, absolutely. And as Justin alluded to, really really critically, we do have Meta and Microsoft reporting. And for those that don't know, Microsoft is indeed the biggest client of NVIDIA. They account for double digits of their revenue. So that is something to consider when you are looking at Microsoft earnings. Do consider that their guidance and their chip spending will probably be looked at with a very fine-tooth comb for those NVIDIA shareholders. So that is a key consideration and when we do get Microsoft results. Also consider, Justin has touched on Meta. Now, Meta is another very big client of NVIDIA. So if you do get a better than expected ramp up of chip and AI spending, that might also boost NVIDIA shares. Of course, as we said, NVIDIA doesn't report until late next month, but we do know NVIDIA, like Justin has said, some other big tech companies that report this week, NVIDIA has a history of delivering earnings surprises, and everyone likes good surprises at a party, and that typically sees their shares rally. On average, NVIDIA shares, just looking at the averages as at this morning, implied average move to the upside of 8.6% for NVIDIA. That is something to consider. Also, as Justin mentioned, potentially look at Mumu's options for NVIDIA. We're just going to cycle through quickly now. Another company that we wanted to focus on perhaps is Albemarle. And so why are we talking about Albemarle? Well, Albemarle, for those that don't know, Albemarle shares have been moving to the upside. And of course, we had better than expected Tesla earnings last week. So Albemarle is the world's biggest supplier of lithium. Albemarle has almost got a contract or an offtake, meaning they dig lithium out of the ground and they sell it. And they're selling it to almost every EV maker in the world that you can imagine. They're not just selling their lithium to EV companies, they're also selling them to tech companies, Samsung, Meta, Microsoft, etc. So we do have Albemarle earnings out in the first week of November, a little while away, but really critical to look at Albemarle because the lithium price has been, I guess, people have been betting that it's going to come out of this bear market, haven't they, Justin? And we've seen M&A activity pick up as well. So really, I think that Albemarle could maybe surprise to the upside. If we think about Albemarle's history, what have they done in the past? They typically do surprise to the upside. They haven't the last 2 quarters, though. So do look out for Albemarle, particularly another catalyst might be BYD, who report today in the Asian Pacific session. So we've got Tesla reporting last week, better than expected earnings. They're upgrading their outlook, expecting to roll out more EVs, expecting more EV sales. Of course, that's on the back of China and US stimulus. Then China's biggest EV producer, BYD, reports today in the Asian session. Will they repeat what Tesla did, report better than expected earnings? All in all, BYD, they are expected to report record earnings, record sales, record EV numbers. So this could potentially be a catalyst, not just for BYD itself, of course, but Albemarle, the world's biggest lithium company. Justin, I know you do have some comments. You, I believe, have been across some M&A activity as well. Anything you want to touch on lithium in the M&A space?
Yeah, I mean, obviously, it's, I think, going to be some of these smaller lithium companies will be targets, and they want to compete with Albemarle, and they're much more likely to do so if they merge together. And so you could see some M&A in the space, and then you obviously could see some of the end customers say, well, we want access to some of these, to lithium, and so maybe we should just go ahead and buy that. So that's something to think about when you're investing in these companies. One is there may already be a M&A premium built into the price. And so if M&A doesn't happen, that could be bad. But if it does happen, obviously, it's not going to be totally built in. So that's and give you a little boost. So it's something to think about. And you can have this headline risk of a transaction going through or not going through, and that could significantly affect the price of these lithium companies.
Yeah, it's a great point. Very timely, because for those that don't know or haven't been across the lithium sector, recently Rio Tinto put a bid. It was accepted to take over a smaller lithium company called Arcadian, I believe, and that didn't cause a significant move to the upside in the takeover company, Rio Tinto, because they're coughing up the cash, as Justin is perhaps alluding to. But the smaller play, Arcadian, saw a cracking run on its shares. But all in all, as Justin's just highlighted, just closing off and rounding out the lithium chat here, I think the fact that we have seen that takeover and the fact that we have seen better than expected sales expected on the runway for 2025 from Tesla. Will we get a repeat with BYD? All in all, the fact is now the world thinks that there could potentially maybe be a supply squeeze. We could potentially maybe be running out of lithium supply a little bit earlier than thought. Of course, that lithium deficit wasn't expected to push up lithium prices until 2027, 2029. But now the market is kind of guessing, hey, we may potentially have a bottom in for the lithium price. What does that mean for Albemarle? We'll find out in just 2 weeks, because a higher lithium price would of course mean higher earnings, higher revenue, and a higher multiple or higher profit expansion for Albemarle. And of course that would materially boost their shares as well. Well, that is the thinking, and that's what you would expect. But do keep in mind that the lithium price, all in all, is down in bear market territory. It's still down some 80%, but do keep in mind that the lithium price has moved up off its low. One other company just wanted to focus on, if not perhaps a sector. I was going to mention Square. So Square, we all know Jack Dorsey. Jack Dorsey has led this company called Square, formerly known as Square. Now it's known as Block. You can trade Block in the US and also down under in Australia. Now, why am I mentioning Block? And I've put up the price of Bitcoin. Bitcoin has just cracked 72,000 US for the first time since about April. So I guess it's an anticipatory move on the back of potentially Donald Trump maybe being voted in next week in the US election. Some are thinking that he's going to perhaps push for more use or advocate for more use of Bitcoin. So again, why am I bringing up Block? So Block, for those that don't know, 1 in 3 consumers, apparently, if the numbers are correct, I don't know about you, Justin, correct me if I'm wrong, 1 in 3 consumers are apparently using one of Square's terminals. So whether you're using their Cash App, that is very commonly used in the US. It's not here in Australia, but very common to transfer money from person to person, family member, from person to merchant on the street using their Cash App. They also make money from their Square terminal. Of course, you get a cup of coffee, you pay for a meal. It might be doing a tap and go on the Square platform. And of course, some of those transactions are paid in the US in Bitcoin. 40% of Square's money is coming from Bitcoin transactions. Of course, Square or Block, depending on whatever you want to call them, they are a very large holder of Bitcoin as well. And perhaps that's why we're seeing Square shares move higher to the upside, is searching for higher levels, potentially looking for maybe a breakout. When we do get their earnings, that'll be something perhaps to go by. Block is also due to report in the same week as Albemarle. They're due to report on the 7th of November. So don't have to wait too much for their earnings. Let's stay on Block for a quick sec. Block has got a history of delivering better than expected earnings. And as we've alluded to, the common thread of a better than expected earnings report is it drives shares to the upside, meaning their shares move higher when a company delivers better than expected news. And Block or Square has got a history of doing that. The implied move or options pricing is suggesting that Block shares will move up 10% on the day that they report or after their earnings results are out. The last time they reported earnings, their shares moved higher. They delivered a 10% surprise. So we're looking for a beat. Well, that's what the market is expecting. If you have a look at the analyst coverage, which you can see on the Moomoo platform, you can see that 39 of the brokers or investment banks that are covering this have got it as a buy, meaning it's undervalued in comparison to where its share price is. I'd encourage you to go and use the Moomoo app and explore if you wanted to potentially maybe consider Block. Let's just go to the questions now, Justin. And thank you again to everyone who sent your questions through. We do have so many questions to get through. We're just going to answer what we can. And if you don't have your question answered, I would encourage you to log on to the Learned Premium section of Moomoo. Of course, that's where we endeavor to answer users' questions each week. So we encourage you to use that section. Also in Learn Premium, you can communicate with perhaps a little bit more advanced traders in the Moomoo community. And of course, there's 23 million using Moomoo's app. Don't know if that number is correct now, Justin. It keeps on growing by the day. I can't keep up. So, Justin, I might kick off with you. This first question is, how will the outcome of the US election affect tech firms going forward? Really important because we've got a lot of tech companies out this week. Justin, what do you reckon?
So the biggest thing I think a lot of people will be looking at for the tech firms is regulation. Are they going to is a new administration going to put in regulation that either hinders their ability to make money or breaks them up? So a lot of these companies are coming close to monopoly power, and we've had investigations from both the FTC and the DOJ into several of the mega cap stocks around search and other things. So what I would tell people about these though is it takes a very long time. So these cases can take years, if not a decade, to come to fruition and can go through several administrations. So there might be this initial reaction that, they're going to be super tough on regulation. They might try to break a particular company up, but I'd be a little bit wary of that actually happening on a really quick timeline. And the other thing, they'll be looking at for the tech companies is just generally, is the new administration going to be supportive of growth and innovation? Are they, going to, keep the borders open so that international growth can occur? Because a lot of these companies are, have a lot of international growth.
Absolutely. Absolutely. And I believe, Justin, you are going to do special coverage of the US election next week. Where can investors find out about that?
Yeah, so you can find out right on the app in the Moo section, and it's going to be broadcast live. We're going to have 3 hours of election coverage from 6:30 Eastern to 9:30 Eastern. This is after the market closes, but again, the futures will still be open, markets will still be moving, and we're going to tell you all you need to know in real time how these results are coming in as each state is called, and then also what you can do to invest around the election. I know a lot of people are not sure. There's a lot of uncertainty, and we're going to break down what's happened before. And actually, Jessica will be one of our special guests on the coverage, and she'll be talking with us about the international perspective, exactly how people outside of the United States are viewing the election and their investments.
Thank you, Justin. And it is worthwhile noting, I guess, it's not just gold, Bitcoin. I don't know if I'm allowed to mention this, but we've got DJT hitting fresh highs. DJT, Donald Trump Media, I saw Justin is up now 330% in 5 weeks. So I guess some think the comments made by maybe Stanley Drucklin Miller perhaps a couple of weeks ago could come true. I don't know. They're looking at the polls. They're looking at betting agencies that are perhaps suggesting that maybe we could see a Trump victory. So it'll be really interesting to see what happens if this plays out, and if Kamala Harris does get in, what that could mean for these Trump trades that have run up so hard and fast. So really looking forward to your webinar next week. So we touched on
a very just one more comment, just a very good point about how the polls have shifted. And if people remember the first time Trump got elected, the polls were a lot different going into that. And I would just, caution people about investing around that before it actually happens. That's why it's important to tune into the coverage, understand what's going on. And what I can tell you right now is the polls are still very close. And so you could see either candidate win. Yep.
It can be very dangerous positioning your portfolio, depending on who could potentially get in. So I 1,000% agree. Investors should perhaps be using fundamentals when they are looking at what to invest in now, focusing on a company that's growing its earnings. What does that outlook look like? Are they expected to grow their earnings, grow their revenue? Remembering that earnings and revenue growth drive share price growth. That's my mantra. People are probably sick and tired of hearing me say that, Justin. But I really think that investors should be focusing on fundamentals rather than positioning their portfolio for a potential win from either party. One thing is I guess a common thread is that gold is hitting new all-time highs. A question here from Gold: what are the upside potentials aside from hedging against the various looming risks? I might take this one and you can add if you like, Justin, but we've covered gold a lot here on Mumu in some of my commentary, and perhaps I think investors are taking heed of what the International Monetary Fund is now saying. They're concerned about financial instability, and they use that language. And so what does that mean? Well, the International Monetary Fund is actually looking at the debt levels in the US. They're looking at the debt levels across the globe, and they're looking at debt in comparison to income, known as GDP. And I guess they're a little bit concerned that debt to income is now 3.3 times the amount of money that they're paying out versus making in debt. So the debts are cripplingly high, and perhaps this is one of the reasons why gold is continuing to move higher, because central banks continuing to buy gold month in and month out. You've got the PBOC, the US, banks in Europe, banks across the Asia Pacific are continuing to buy gold week in and week out. The other, just to answer this question a little bit differently as well, the other upside potential that is supporting gold to high levels is that we are going into a US rate cutting cycle. And the last 3 times the US central bank has cut interest rates, gold has rallied higher to record all-time highs. So some are thinking that will continue, but the reason that typically does continue is if you see depreciation in the US dollar and bond yields. So we probably might need to see a lower US dollar and lower bond yields for gold to move higher. But all in all, do consider that central banks are still continuing to buy gold. So that's something for you to consider. Justin, a question here about what we can expect for the S&P 500 ahead. Goldman Sachs is saying a 3% S&P 500 annual growth rate for the next 10 years. One of the reasons is due to a frothy valuation. What is your take on the 3% annual return? Justin, what's your take on that question?
Yeah, so I think you have to give that some credence, and the way you got to think about it is valuation. So if you could have a great economy, you could have great stocks, but at a certain point, you only want to pay so much for a stock. So if you run it up 30%, 40% every year, and it's only supposed to grow at 10 or 15%, you're taking away from future gains. So those gains might not be as good. So to give you an idea, the S&P 500 forward price to earnings multiple, 12-month forward price to earnings multiple 2 years ago was 17. Now it's 22. So we've had good earnings, but we've also had a large expansion in these price to earnings multiples. The Magnificent Seven was at 25 times. Now it's at 30 times. So at some point, either earnings are going to have to go up, are going to have to accelerate even more to keep up with this 10% level of growth, or we're going to have to see muted growth. And this is what Goldman's really getting at. At some point, you have to pay for those gains you already had. It just can't continue to go up without either one expanding the multiples. It doesn't mean multiples can't go up more. We could go up to 30, and then it would go even higher. But if we go back down towards a more realistic 15 level or 14 level, and depending how the economy goes, that could mean muted returns going forward for the next decade. So it's something to think about when you're investing for the long term. The other part of it I would mention is treasuries, right? We sat in a zero interest rate environment for, over 10 years. And so the only alternative was to invest in stocks. Now you're getting some nice return on very safe US treasuries. And so some investors may say, well, I'll take my 3 or 4% return in treasuries that are guaranteed versus trying to get that in equities. And that will influence the valuations of equities going forward for the next decade. That's another point you should take into account.
Yeah, well said. And just to say it differently for those that aren't really sure of the language that Justin's used, so treasury is just what we might refer to as a bond, so a U.S. government bond. So you can buy some of those ETFs on Moo's platform if that's what you wanted to do, and you might be partaking in growth, but you're typically looking to buy a bond for the yield and for that capital certainty, because you've got the backing by, of course, a government. There are, of course, some corporate bonds that you can buy as well, but just use the search function on Moo's platform. If I can just answer this question a little differently, if that's okay, just for a different way to skin the cat, I guess, if you will. So for those who are just dialing in, the question is earnings, or rather annual growth rates are expected for the S&P 500 for the next 10 years. I don't know about you, but I don't typically invest in things set and forget for 10 years. So what I would encourage you to do is, when you are hearing Goldman Sachs talk about, only expecting 3% growth for the S&P 500 for the next 10 years, maybe you want to take a more nuanced approach. Maybe you want to be stock specific, as Justin is saying, or maybe you want to invest on a 6-month period. Whatever it is, come up with your own strategy and philosophy, but do consider this. I'll tell you what the market is thinking for the NASDAQ 100. The NASDAQ 100, of course, the biggest US tech stocks in the US. We're looking at growth rates of 13%. So that's 13% growth, implying upside of 13%. S&P 500, the market or consensus is expecting 9.5% growth. So really, really good growth rates. I guess, are they above average? Perhaps yes. And then you dive into the detail. Where is the most upside expected? Where does the market or consensus think the most growth could come from? Well, it's from chips, the obvious ones. Also stocks like Adobe, Google, Amazon. So these companies have got some of the strongest growth estimates. We're talking share price growth here. Health names as well, like Dexcom, GE. The market is expecting high double-digit growth rates. We're talking over 20% growth. China beneficiaries as well, listed in the US, such as Pinduoduo, PDD, for those that aren't familiar. So many ways to skin a cat. Think about being stock specific. Maybe think about what duration you want to have. Justin, a really good question here about what is the safest asset haven. I'm just reading it out word for word here. Do I buy treasury bonds, gold, or Bitcoin? Should we invest in all three? Justin, you've touched on it. What do you reckon?
Yeah, so to me, when I think of safe and thinking about the risk, you want to think about a guaranteed return, and treasury bonds give you a guaranteed return unless one of two things happen. One, the U.S. government defaults, which is highly unlikely to happen, or two, you don't hold to maturity. So a lot of times these bonds are longer term investments. You're going to buy a 5-year bond or a 10-year bond. You're going to hold it, as you said, for this yield. And you're going to get a certain amount, 4% for every year for that period. Gold would be maybe the next level up. And so gold, we hear, you talked a little bit about it before. And the interesting part is we saw, I think gold is up. If it holds this year, it will be the best year in dollar terms since 1979. And that's when we saw over 11% inflation in the U.S. So there's this idea that gold is an inflation hedge. We're not really seeing that, inflation is not that high this year. But you really touched on it before. Gold is really a hedge now against this massive amount of fiscal spending without the taxation. So deficit spending by U.S. government and other international governments. And this is causing this flow into gold. And so some people will view it that way. Bitcoin I see as much more, if you've looked how Bitcoin's traded this year, it's much more of a risk asset. You'll see when the NASDAQ sells off, you'll see Bitcoin sell off. So, I think that's more of a asset. People take a small position as part of their portfolio and consider it more risky. It could have a larger upside potential, but it also could have a larger downside potential.
Yep. Thank you very much for covering that. Just before we do close off, conscious of time, with the US election just a week away or under a week away, I just want to see if you can answer this question real quick. Do you foresee the US market having an adjustment after the US election based on historical statistics? What could be the magnitude of an adjustment?
Yeah, and that magnitude will vary. We saw a rather large move a few cycles ago when we saw, I think 08, we saw a 5% move, the day of, and that would be to me a massive move. But we were also in the middle of a global financial collapse. So you also have to take it in context of where we are right now. As you said, we're in a bull market. We're in a pretty stable economic environment. So it would have to be some type of massive surprise where you could see a massive sell-off. It doesn't mean it couldn't happen. And particularly the case that a lot of people are talking about is if you get a election, not only where the presidency goes one way, but that party also wins both houses of the Congress, and they're able to enact a lot of legislation. That could be the true risk to markets. And so not only do you have to track the presidential elections, but you have to track the Senate and the House elections that are going on at the same time. And that's the important part to make. And one last point I will make, I'm really watching these bond yields. The Fed has cut rates and long-term bond yields have gone higher by a lot. And that speaks to exactly what you were talking about in the fiscal spending. And if people believe, and both candidates don't have a great track record on fiscal spending, right? They're not about to bring the budget in line. And if the market thinks that's going to get away, watch these long-term bond yields. If they shoot up a lot, the stock market could be in big trouble. So that's the first thing I'll be watching. The bond market is much larger than the stock market in terms of liquidity and size. You want to watch those 10-year notes going out of the election.
Yeah, well said. And just also echoing that as well, you not only want to be watching the bond yields, of course, you can keep track of those on Mumu's platform, or depending on what news provider you want to use. You also want to be watching the US dollar. And of course, the third thing is the volatility index. So the VIX index, which you can track on Mumu just by typing in VIX, that typically does tend to rise ahead of the US election. And that could also mean when we typically do see a spike in the VIX and bond yields and the US dollar rises up, that can typically cause pressure and cause markets to pull down and take a haircut. So that is something really to be aware of. Yes, the markets are at record all-time highs right now, but that doesn't mean, as we're saying next week, that doesn't mean that markets might not see a pullback. And Justin, I believe that's all we have time for. It's been an absolute honor and a privilege. Justin Zacks, US Head of VP Strategy in the US. Thank you very much for your time. And just a very quick reminder, investors can dial into your webinar next week on the US election. Quick reminder of where we can get those details.
Yeah, thank you. Thank you very much. It's been a pleasure to chat with you today about everything around earnings and just more of these stock trends and the election. And again, on the app, in the live section in the community, you can see on Moo Live starting again at 6:30 Eastern. Please note we're switching daylight savings. We're rolling off that in the U.S., so it'll be a different time for all of our international viewers. So please track that, and then we're going to cover it for 3 hours, and we'll have a lot of different guests talking about a lot of different topics, very nuanced things around how the election can affect your investment portfolios.
Wonderful. And of course, if you have any questions and if your questions weren't answered today, please head to Mumu's Learned Premium section where we will endeavor to answer your questions there. Justin Zacks, US Head of VP Strategy. I'm Jessica Amir, Market Strategist from Mumu. Stay tuned to Mumu for this big week of US earnings. Thank you.